Hey folks, and welcome to the MRZ podcast. My name is Moritz Weber-Schön, and today I and Maximilian Nansing are talking to Mark Buschmann. Hello, Mark.
Hello.
We are delighted to speak today with Mark Buschmann, partner at PJT Partners, Restructuring and Special Solutions Group based in New York, about distressed advisory, the current market situation, and his personal experiences. You have been working in distressed advisory within the restructuring group, first at Blackstone and now at PJT Partners, for more than 20 years by now. What fascinates you about it every day, still today?
Well, first of all, thank you for inviting me. I appreciate it. Always fun to speak with potential future restructuring advisors. So hopefully this conversation is of interest to many of you. I think your question is an important one and why I've stuck in the industry for so long. Restructuring is different than the other parts of investment banking, and we do a little bit of everything that you would think about in corporate finance, everything from valuation to capital structures to raising capital to the legal structures that exist not just in the U.S. but globally for corporate credits. So what fascinates me is the fact that it touches so many parts of investment banking, and ultimately your skill set develops much broader. You need to use many parts of your brain. You don't do the same things every day. And ultimately what you're advising is a client who has never before, hopefully, never before gone through this situation. And so your advice is of critical importance to them, to that management team that really has no experience in what they're about to go through.
This podcast is also intended to introduce business students to the topic of distressed advisory. Can you perhaps start by explaining what a restructuring group of an investment bank or investment boutique actually does?
Perfect. And this answer probably would have been different when I first started. Our jobs really have expanded and grown. But in the simplest form, we are capital structure advisors, meaning we advise companies or creditors, those who own the debt, ultimately on how to fix the capital structure. And that can be done through solutions that don't involve any kind of judicial regimes or let's say Chapter 11 in the United States. It can be done through exchanges or tender offers or equitizations that are agreed to, or they're done through a judicial process like Chapter 11 in the United States or some of the European regimes.
Very interesting, Mark. And how does the advisory approach for debtors and creditors differ?
It is different. For a debtor side, your job is to propose the solutions. You are the one who is somewhat starting with what I like to call a blank piece of paper and have to figure out what paths work, where the value sits, who should be getting what solutions are needed, what does the company need to actually thrive and grow into the future. On the creditor side, you are a bit more reactive sometimes. That has changed over the years. We have some very proactive creditor groups that go into situations very much with a view of how the company should look going forward. But ultimately, you're the broker in between what could be multiple constituents that have to find the solution that makes everybody either equally unhappy or happy, and doing that in a way that protects the company going forward.
And can you explain how the restructuring group is embedded within the investment boutique PJT Partners?
Yep, within the boutique, so within PJT, we have what are really three main groups. We have an M&A group, a restructuring group, and then we have a group called Park Hill that raises capital for private equity funds or hedge funds or real estate funds. Restructuring is a business that, while it's part of investment banking, is traditionally not done by what we call the bulge brackets, the big money center investment banks that you have out there, the Morgan Stanleys, the Goldman Sachs, because in the U.S. they are not deemed to be disinterested from the outcome because they have in the past traded or been active in trading the debt of those companies. We are not traders, so we have no prior involvement with those companies and the securities, and so the world of restructuring is only really exists in investment banking that is done by what is now a very large growing sector of investment banking, which is the boutique banks. So view ourselves, our competitors will be somebody like the Evercores or the Lazards, as opposed to the Morgan Stanleys or Goldman Sachses.
Very interesting. And to what extent and how exactly does the restructuring group work together with other product groups or industry groups within PJT Partners?
Our business has become increasingly competitive, and so having a industry expert, because we are generalists, we don't specialize in any one industry in restructuring, although many of us have subsectors that we follow and are enough to be dangerous in them, but we do still like to work with our M&A colleagues who are really specialized in that industry. Ultimately, they may also have the better connections for new deal flow because they're companies they may have called on in the past. So we work very closely with our M&A group in that regard. We usually have somebody embedded in our processes if that's applicable. And then with the capital markets group, the world there too has changed a lot. Now in the evolution of the direct lenders who have become major players in all forms of financing, those typically used to be hedge funds that were our clients. And so we have a lot of overlap when we look for capital in the type of investor that is willing to lend to companies that are not investment grade and that are most likely to be higher yielding pieces of paper. And so we work together with our capital markets to specialize, that process of finding capital. And a lot of times it's the same names that we've typically worked for that they'd be calling on as well.
You studied economics and German at Dartmouth College and then joined as an analyst Solomon Smith Barney's Financial Institutions Group. Of course, we are curious about your German studies. How did that came about? And what was your motivation to start a career in investment banking?
Sure. So the German, and to be clear, it's German literature. I was German, or am German. I was born in Dienstlaken and lived in Ratingen near Düsseldorf till I was 8, and then moved over for my dad's career for what was supposed to be a short-term assignment to the U.S., and the family never left. So I guess I became an American that way. So there is some German in my background, and I do speak German. So to be clear, I did not get an A in German at Dartmouth just because I knew German. It was German literature. So I did expand a little bit on what really was of interest to me, which was German literature as opposed to just the German language.
And why exactly did you start your career in investment banking?
Well, they were willing to give me a job, which I think was the most important thing. Everybody get a job first and then figure it out. But I did, when I decided to go into business, which was always maybe because of my father, was always my vision. I think the world sometimes narrows your choices down, and in 1996, when I was finishing Dartmouth, the world of business really meant investment banking, consulting, or advertising. Advertising was definitely not my preference or my strong suit, and so I pursued a recruiting path for consulting and investment banking, and ultimately I always was fascinated by Wall Street, the banking world, maybe because my dad was a CFO way back when. So it's genetic. I decided to pursue a career in investment banking and Smith Barney, which in my 3 years there went from Smith Barney to Solomon Smith Barney to ultimately Citigroup, as travelers bought a company every year I was there. Was the exciting first job where I became a financial analyst and got introduced to investment banking.
All right, as one could just hear, Solomon Smith Barney has a very dynamic history. Could you elaborate on that?
It was, when I started, it was Smith Barney, which was owned by the Travelers Insurance Company. My first year, maybe first year and a half, we bought Solomon Brothers. So then the firm was renamed Solomon Smith Barney. And then my last year, or toward my last year, they bought Citicorp. And then the whole thing became Citigroup. So little Smith Barney, owned by an insurance company that probably most Europeans have never heard of, was probably one of the biggest financial stories when the U.S. changed their laws and allowed for a commingling of insurance, banking, and investment banking by changing the law that was called Glass-Steagall, became this behemoth that ultimately now we call Citigroup. But really that was a little insurance company called Travelers buying up a number of the institutions.
After an MBA from Kellog School of Management, you joined Blackstone as a part of the Restructuring and Reorganization Group. At Solomon Smith Barney, you worked in the Financial Institutions Group. How did the move to distressed advisory arise, and what were the biggest differences? Probably it complements each other very well, as you've already advised banks and investors there.
Yeah, no, sorry, didn't mean to jump in. Again, opportunities arrive and you need to jump on them. I left investment banking thinking I would never go back into investment banking. I was focused on M&A for insurance companies, which was not something I wanted to do long term, and felt that it had a very limited universe of companies that I was looking at and was interested in. And so I went back to business school, and at that time was when we were starting to see a recession in the United States, and it was really when the first dot-com bubble burst, probably before all of you guys were born. But there was a time when, the early days of the internet, when there was a lot of growth with telecom companies building out wires and internet companies becoming, very large very quickly, and got ahead of itself. And that caused a massive sort of bursting of the bubble, ultimately also recession. And then, of course, 9/11 happened. So I picked a job that ultimately I saw the writing on the wall that we were going to be in a recession, and that distressed may be a very good place to, I would say, hide for a couple of years before determining my next job. And that job that I hid in was restructuring, because it was just the perfect timing for that kind of a job given the economy, and I stayed ever since.
And to what extent did the work in the Financial Institutions Group help you later at Blackstone's Restructuring Group?
Yeah, I think the background, again, it's all investment banking, right? So ultimately your job is to understand the capital markets, the process of raising capital, but most importantly, valuation, modeling, everything from, the typical ways to value a company, from comparable companies, transactions, DCFs, LBO models. All those things were things that we were doing as well. And so it very much was complementary. It's just looking at the world slightly differently. We don't look at the world in price to earnings multiples. Most of our companies don't have earnings, so we're very much more focused on cash flow, EBITDA, and just have a much more of a trained eye in valuing companies in a world of turnaround, as well as ultimately keeping a close eye on cash flow, because again, most of our companies lack cash flow.
PJT Partners was founded in 2015 as a part of Blackstone's spin-off of its financial and strategic advisory services businesses. You were there when PJT was founded, so how did you experience this time? What opportunities did you see, and what challenge did one face?
Yeah, it was 2015, and we were, at this point, a very smaller and smaller group in Blackstone. And as you know, Blackstone has continued to grow massively. So I was lucky enough to be a partner at Blackstone. But at that point, the advisory businesses were no longer a focus, and it was viewed by the Blackstone team that it was best that they spin out the advisory businesses. And we merged with a little boutique started by Paul Taubman called PJT Partners. And so we were a tax-free spin out of Blackstone with a merger into PJT Partners. So the amazing thing for us, especially those who had been there for so long, was even though we were a very established business with clients and a book of revenue, we were able to experience a startup. We moved offices, we designed offices, we started with a small number of partners that quickly grew into a much larger number of partners. We acquired businesses. So it was a very exciting new start because instead of being a small part of a big business, we were now a big part of a smaller business, and that business was in a growth phase. So for, I think, myself and the partners there, it was just a very different job. The job was the same, but the environment was all of a sudden exciting and just very new to all of us.
When you worked at Blackstone, you were a senior managing director. Now at PJT Partners, you're a partner. Does that mean that you are equity partner, or is it another name for basically the same title?
Yeah, the senior managing director at Blackstone was a partner title, so they just don't call them partners there; they call them SMDs. So it was that was one of the decisions: was what do you call a partner at PJT Partners? Well, it's already in the name, so you really can't call them SMDs when you are already partners as part of the name. So we switched over to being called partners. But again, those were all decisions that were fresh and new and things that had to be decided upon.
Thank you very much so far, Mark. For the next part, I will hand over to Maximilian.
Yes, thanks a lot for the elaboration so far, Mark. Before I want to start with the market outlook and take a deep dive with you into it, I just wanted to briefly add another question regarding PJT Partners. As some of our initiatives have already visited PJT Partners in London in the course of the London Tour 2023, we were, of course, very fascinated by the environment which was created since 2015. Maybe you can give us also a brief overview of what else of initiatives PJT Partners has planned for the upcoming years. Some of us have already heard of another office which will be set up in Munich. How will PJT Partners will develop its European, its American business?
Yeah, I think, we're still a growing business without a doubt, and we've been lucky enough to grow quite a bit, since 2015. Which was always the goal. We were supposed to grow. So I don't have any, exciting news to break in what we're doing next, but needless to say, we're going to continue to grow, and it's always on an opportunistic basis. We're adding partners, we're adding different strengths to the team, and if those involve, opening new offices, that will be, I'm sure, considered by the management team and by Paul. And so no news to break, but we are obviously a growing firm, and that will naturally entail, new regions, new people. But ultimately, we're a people business, and it's going to be driven by who comes on board.
Thanks a lot. So now I want to draw attention to the market outlook, and we've already discussed your career path, especially in the distressed advisory and restructuring business. And we are living in very disruptive times. Over the past decades, we have had quite challenging economic environments. And we, of course, want to know how restructuring, how debt advisory, distressed advisory has evolved over the years, and what is basically the role for the next years of this specific industry? What can we expect?
So the industry has changed quite a bit, and I think the job of a company side advisor may not have changed as much. But when I started, you have to think about who the creditors were. It was before the massive rise of hedge funds, direct lenders. So when I think of my first restructurings, the creditor universe were large banks, which were had syndicated out bank loans, and bondholder groups, which were usually the trustees, and then mutual funds or those type of investors behind it. The world has changed a lot. Now we are in a world where we have very active distressed investors, hedge funds who are buying loans or bonds at discounts, coming in. They may have a thesis of how they want the company to change or to look. And so it has become a different negotiating environment, because some of the players who've now taken a very large role, are just a different type of institutions and may have different ultimate goals. Now we have a world where it's really CLOs and distressed investors, and then, traditional investors who now have very much expanded their capabilities in distressed investing. So if it's a large international mutual fund, they may also have someone now on the team who very much knows that, what a distressed investment looks like and is willing to continue to buy into that with the ultimate goal of making money. So it is a different playing field, but the rules are the same, but you definitely have to know more about who is on the other side of the table and what their motivations ultimately are.
That's very interesting. I also want to add another question. In our initiatives, we have talked quite a lot also about the private credit market in this regard. And we have seen that this market has been thriving enormously over the past couple of years, and will be an asset class which is very lucrative also for the long-term future. Why do you think also, when working together with private credit funds, is this asset class so important for the market? Will it be important for the market? And what role will it also be when companies would, for example, start to go into the real distress for the private credit funds?
Yep. Yeah, I think absolutely. I think private credit funds are an important solution in just the efficiency of the capital markets. They're yet another player. If you think about how they evolved, it's, where the money flowed. They had the money and were able to address, a credit that may not be a typical investment grade credit, that had more of a story needed to it, more of a, obviously required more yield. If you think about how all of these players evolved, it was, through the times of a very low yield environment. And, these were funds that were looking for, how do we get more yield through the credit world? And so they stepped in where maybe some of the other players, traditional players, could not. So they will be in a very important part, and have been an important part of the restructuring world, and they are very active. And again, the rules are the same, the motivations are the same, but they are now a much larger force that we work with and work for as well. So it goes both ways.
So now I want to draw attention on the person who is behind Mark Buschmann, and we want to see what it's like working as a partner in the Restructuring and Special Situations Group at PJT Partners. What are basically the main challenges of the day? What are the biggest challenges? And how much are you involved into the business PJT Partners itself and its long-term development?
Sure. So a lot of questions in there. As the partner just in the group, obviously revenue generation is ultimately probably most important, and probably what we get paid on, which is, bringing in new deals and being able to execute them. That brings, its own challenges. And so that's obviously an important part of my day. But then on the execution side, I have a team on all my transactions that work with me, sometimes also another partner. And so, when you talk about the challenges, it is, one, making sure the team is able to execute, that they have from me what they need. We talk about the strategy, the direction, the work products needed. And, I'm lucky that, and we at PGT are very lucky that our teams are phenomenal. They really are, in my mind, the best of the best. And so that should be a daily challenge. I think I'm lucky in that it's not as challenging as it usually is for investment bankers. Our teams are just great, and so we get together, we figure out what needs to be done, what area of focus the analysis should have, what's needed for whether it's a board meeting, a meeting with management, a meeting with creditors. So those are what I would say the challenges, but also the opportunities and what's exciting, because that is always something different. Is it a cash flow analysis? Is it a valuation analysis? Is it how value gets allocated to various creditor groups type of analyses? No two are the same. I remember in bulge bracket investment banking, we had models that were templates where you would punch in the company's information and, the answers all came out. And we don't have that. We start with a blank Excel spreadsheet and build from there, and a blank PowerPoint presentation and have to build from there. Everything is specialized and different for the situation. So that's the challenge. But that's also the opportunity. There's no path that's usually been laid before that you can just follow and say, well, this is just like this, so I'm going to do it the same way. Every deal is different. So that, I think, is both the challenge. What makes a good investment banker is to see that and then strategically take a step back and say, how are these different groups going to agree to a deal? What is the common solution that makes them all happy? And sometimes, when I say happy, it has to be everybody is unequally unhappy or equally unhappy, said more properly, but that gets a deal done, because I think everybody has to change their perspectives in a negotiation and agree it's never going to be exactly how you thought it was going into it, because the deal, gets shaped in the negotiation ultimately. In regards to PJT itself, like I said, we're a growing firm. I'd like to think that we all still have, we all know each other as partners. We, hopefully have input in how the firm continues to develop. And that was obviously when we were a lot smaller. It was probably more so. Now we are, an ever-growing enterprise, but, we are hopefully an important voice in how the firm continues to grow, and we're all very much invested in PJT to continue to grow.
That's exciting. Maybe you can give us a brief outline of how a typical day looks like when now being in the partner position, so that we really get to know hands-on what it's like, basically being on top of the pyramid when it's about the career progress.
Obviously, get in the morning, drink a lot of coffee just to get ready for the day. And then, usually we will sit down and, as I mentioned, talk about the deliverables, what we're working on for each deal, and what sort of the outlook is, meaning, what meetings are coming up, what negotiations are coming up, what needs to get done. In restructuring deals, we work very closely with law firms. They are, really, we almost form one team, and so we're very closely connected to them. And then sometimes at the companies, we have financial advisors who are people like the Alvarez Marcells, the Alex Partners of the world, who are giving the management team extra help in creating some of the data that's needed for restructurings, and some management help as well. And so it is coordinating with all those parties, again, what the path of the deal should be. So that usually is in the mornings. For lunch, we need to keep our eye on new business. And so there's a lot of interacting marketing meetings, marketing lunches, trying to connect with others in the industry, see what they're working on, what we can work on together. Then, the afternoon is most likely reviewing analyses and various documents that, we're working on or the lawyers are working on, and, ultimately, being ready for what could be a meeting or a negotiation or, whatever the next day sort of holds. But again, that day is going to change dramatically from day to day. It could be very different one day to the next. There is no typical day, which is what makes, I think, the job so interesting and exciting. That repeats every day. I guess you don't have the monotony of what a typical day is. And so that is, for all of us, pretty exciting.
It certainly is. And when having a look at the restructuring process, as you've mentioned, reviewing where the teams are currently working on is one of the main duties when starting the day. How does such a restructuring process, a structuring mandate for a corporation develops over time? We start at the origination and basically then the successful turnaround. What are the main challenges, and what is the most nerve-wracking part of the whole process?
I think the hardest part, and I'll just speak from I'm mostly a debtor side advisor. I do creditor work as well, but most of my career has been on the company side. When you talk about the origination of the deal, so let's just call that a pitch, what you're putting forth in terms of the ideas, the process, what your ideas are to make this restructuring go in the direction that maximizes value for the company and, helps the management team the most. The reality is that every deal then changes. It's not how you pitched it day one, because the facts on the ground change constantly, and you have to be willing to and be ready to look around the corner to see what's coming at you. That's really what is the hardest part of the job, but also what makes an advisor better than their competitors, anticipating the potential changes that could occur. And I think the hard part, the human part, is working with the management team to get them to understand that, unfortunately, there are going to be changes and you're going to have to adjust, and things may not be exactly perfect as you envisioned. If you think about an M&A process, and I don't mean to generalize it, but it's a buyer and a seller coming together, negotiating a price, and the implementation of that. That has many challenges in and of itself and many twists and turns, of course, in a negotiation. But I think the degree to which deals can change in our world probably is a bit uncomfortable for some management teams. And so you do have to work with them to make them understand that there are, by definition, going to be challenges coming up which will be tough for them to get through, and you have to make sure that they're most prepared for those challenges.
PJT Partners has been involved in quite a few prominent deals in the recent years, and I'm certainly sure that there is also one deal which might have taken your interest, or which has been the most exciting for you in your whole career process. Which I think is still thinking of today. So what do you think is the one deal, or is there one deal you certainly found the most challenging, interesting, stimulating one? You don't have to, of course, say what corporate it was, but basically just to give us a brief outline of what the mega deal looked like you worked on.
There are three deals that do stick out in maybe four deals, I guess, and they are public. But Delta Airlines was probably definitely one that, as a young VP, working through that was just, I would say, most rewarding. Rewarding in that, we're flying Delta today, and Delta has gone from, one of the many mainline airlines in the United States to being a global player with amazing service and much bigger than it was, and was able to go through a merger and continues to, be a massively, profitable enterprise with a lot of the same people that we worked with way back when. So that, I think, is still one of the most rewarding deals, because I fly Delta a lot, and every time I'm on a Delta plane, I'm pleased to see just how well they're doing. But that was a deal where we had, an industry confluence of low-cost carriers attacking the established airlines and changing the industry landscape. We had a commodity issue of a very high price in fuel. We had a capital issue where an old airlines needed to replace their fleets and make them more efficient. We had labor contracts that were at the time not sustainable given what the low-cost carriers were doing to the industry that had to be addressed. And then we had to think through, what makes the company best positioned to be part of a landscape that was going to ultimately merge with other airlines and hopefully be the acquirer versus the acquiree, right? So it was, in that sense, it had so many different facets to it and was long and at times very painful, but also, I would say, very rewarding. What's probably most interesting would be the sale of the Los Angeles Dodgers, which, again, a baseball team in America. I'm sure somebody somewhere on this podcast is wearing a Dodgers cap because it's probably a big brand that everybody globally knows. But that was interesting, not so much that the company was distressed. It was, a negotiation with the league that was very contentious, but ultimately a sale process that was so successful at the time, a multi-billion-dollar sale of a baseball team, and just the characters that were involved in that sale process, but just the interest in it. It was obviously very public, and so being part of that was very exciting.
So you've told us that working as a VP on such a major transaction on Delta Airlines is obviously something challenging but rewarding. How does it look like regarding the skills you brought into this deals, or especially when going back in the career to a more junior position? What is it like? What are the three main characteristics a fantastic restructuring and distress advisor must have compared to a traditional mergers and acquisitions investment banker?
Yeah, I think it's true for all, whether it's M&A or restructuring. I don't think there's necessarily a difference. Obviously, we need our analysts, associates, VPs, everybody to be a lot more attuned to the capital markets and to cash flow modeling and the like. But ultimately, what makes a good member of the team is, one, you have to be intellectually curious. You have to think about, the issues that we're all facing on the deal team. I want to hear everyone's thoughts. I don't want to sit in a meeting of the deal team and just say, we're doing this, we're doing that. It should be a conversation. And sometimes it is the analysts who a lot of times a lot smarter than the rest of us, are able to bring forth an idea that makes the most sense. And they are closest to the numbers and are able to really bring a lot of value. So being intellectually curious, always asking questions, doing your own work on your own if there's a topic you don't know, making sure that, even during a deal, you look it up, you do some research, so that not everything is being given to you, that you're also on your own doing your work. I think that's super important, and will just benefit you in any job and anything you do in life. Two, you have to be a quick learner. I think everybody is happy to explain something to someone once, maybe twice, but the third time we expect that work product to be correct and the concept to be understood. So the quicker learner you are, the better. And the third is to be proactive, meaning if you can, as an analyst, do the work of an associate and take things off of that person's plate, that associate can now focus on doing the work of a vice president. If that's possible, then that vice president will do the work of the managing director, and then at some point, lucky me, hopefully the MD is doing my job and I can focus on something else with my time. That's the perfect scenario. That's how it has to flow. But you only do that if you are proactive, and instead of just waiting for work to come to you, you are, in someone's office interacting and saying, hey, I did this, what else can I do? What should we do next? And really pushing the deal forward. That's an incredibly important skill set. It also means on calls that you're not shy and quiet. I think our junior people are exceptionally known for opening their mouths and asking questions and even giving answers in front of senior management. And we have the trust in them to do that. And that's, again, just such an important skill. If you're quiet and are just doing your work in the background, people aren't going to notice you. And I think it's important. It's an important life skill to know when to to be smart enough and educated enough in the issues that you've done on your own to be able to voice your opinion. And we give that leeway for them to do that, and then to add value, where then the CEO says, how old is that analyst? Are they really, they seem like they're 28, 29. And I'm like, no, they're 23. They're just out of school. And there's always a surprise. That's the best scenario. That's the luck that we have, is that we have people who are very proactive and are able to add value from a very early stage onward. Again, they're not giving major advice to a CEO, but they're able to contribute to the overall team in a way that adds value immediately, and that is very critical.
One last question from my side. When going into the deal maker perspective, when a company is facing distress, the media will know for sure when it's a major corporation or when it's in the really final stage. How is it like when you inform yourself about potential distress situation cases? Do you know many of those things before the market knows them?
I think there are a lot of situations where we know things before the market knows them. Certainly, obviously, on our own clients. I do think that in our industry, there are things that we are starting to see historically before maybe the world saw it. As an example, I worked on a hedge fund that was part of Bear Stearns, which was part of Bear Stearns Asset Management, which was investing in CDO squareds. And when we were brought in to help this hedge fund figure out how to restructure itself, we asked the question of, what are CDO squareds? Never heard of them. How is this impacting the business? And quickly we realized that, we were at the beginning of what could be a very serious housing crisis, and then obviously a financial crisis if others face similar issues. And sure enough, less than a year later, there was no more Bear Stearns, and we were at the beginning of what was the 2008-2009 financial crisis. So we're lucky enough, or maybe unlucky enough, depending upon your perspective, on seeing some of the trends in the economy when our clients are having issues. You have to ask, why is my client having this issue, and could others be having the same issue? And that tends to be the beginning of potentially a much larger issue that affects the entire economy.
Thanks. Moritz, I will hand over to you.
Yes, thank you very much, Maximilian. Given all your experiences, Mark, with investors, which investment advice would you like to share with everyone, and which is the best investment advice you ever received?
So I definitely don't give investment advice, and I'm probably not a great investor myself. No, I think just for our own compliance reasons, obviously our investment is all sort of third-party managed. But there are many deals, I think, or situations I've looked at and said, I wish I could invest in this company going forward, because I like the management team, I like the business model. I think they are primed to do great things. So I am unfortunately the one who gets to see those situations, but does not get to act on them. And there are a few times, where it's unfortunate, but I'm also happy that maybe things that I saw end up being true. But of course, there's all situations where I thought it was, going to go one way, and certainly did not. So like all things, you can be right some of the time and wrong a lot of times as well.
You mentioned earlier what analysts or associates should do. Can you now elaborate on maybe avoidable mistakes? So which avoidable mistakes do you often see young investment bankers starting their career at PJT do?
Don't be afraid of the hard deal. There is, and this is even mistakes I made, was not that you can always influence what deals you work on, but sometimes you try to avoid deals maybe that you think are, it's going to be really hard, a lot of late nights. If I have a chance to not do that, maybe I shouldn't do this deal, work on something else. Don't avoid the hard stuff, because it's the hard deals that are the ones that, and this is probably, as I'm now turned 50, so I feel like I'm an old man. In life, you should just know that the hard things, getting through the hard things, are what build resilience, but also end up teaching you the most. And so don't be afraid of the hard deals. Those are the ones that you'll look back on ultimately and say, those were probably the most rewarding. Yes, they were tough. In life, you forget sometimes the hardships and just remember the good stuff. And so it's an example of exactly that, where you gain a lot of knowledge, probably make a lot of relationships that are long-lasting, important for your career. And the fact that you were up many nights working late, you tend to forget that over time.
In our short briefing before the podcast interview, you told us that you now work from your home office and live outside of New York. Is there a trick or tip you would like to share with us to combine career and family in the best possible way?
Yeah, there's no tricks in life, unfortunately, that make it that much easier. The only advice we give to folks now that I have this longer career is it always gets better. So when you have to realize that the beginning of your career, whether it's investment banking or consulting or working in a factory or whatever it is that you're going to be doing, the first years are always the hardest, and that's when you should be putting in the most amount of hours to get on the right trajectory that you want for your success. If you don't want success, then don't. That's fine. But if you're ambitious and you have a vision of where you want to be, those first years are the ones that determine your slope and how fast you're going to rise. And so putting in those hours is very critical. It comes at a cost, and there's a limit to that. You should not overdo it. But know that as you get more and more senior, life gets a lot easier, and you do have time for your family. I have 4 kids, so my family life is hectic and crazy, but you're able to manage that as it goes along. If you early on say, no, I don't want that, you have to think about, okay, but that's where you're thinking about it today, but in 2 years, will life be different? Can it be managed? And so listen, since COVID, we've all tried to do a much better job of managing lifestyle balance. It's frankly, if there is any benefit to COVID, it's that I think everyone took a reset and looked at how life, what things can be improved to improve the work-life balance. We've looked at it, absolutely. I'm talking to you from home on a Friday, so those are all important things, but your career over time, it gets easier. The things that take you 3 hours when you're younger take you a lot less when you're older, and that opens up a lot of free time to have a normal life with your family, and to enjoy that as well, which is very important.
Very interesting. And now we are also almost at the end of our podcast interview. Could you share at the end maybe a few recruiting tips? So when young students listen to this podcast who are also looking for a career in distressed advisory, how do you usually get there?
So we, through our recruiting office, our HR office, there are various deadlines for dropping in a resume. It's as simple as that. But I would say before you do that, or as you do that, and I get many emails, so don't email me, but do be educated about the industry. Speak to people who are in it. Know about the company that you are interviewing for. And I was kidding. Obviously, you can reach out, but it's important to make that connection so that when someone sees not just the piece of paper, because on a piece of paper everybody looks the same a lot of times, having the interaction, knowing what the job is, being educated about the firm, about the role, shows a lot of interest, and that to me is always most important. So the obvious answer is drop your resume in with the Human Resources Office for all the deadlines. There are a lot of internships, there are a lot of, every year there's a big process for finding people, but know that many people are applying, and whether it's PJT or one of our competitors or any consulting firm or whatever you're applying to, make sure you know who you're applying to, and make a connection with somebody there who can then say, you know what, I've spoke to this person, they actually are very interested. they know a lot about the space, take a closer look at them. That is the important thing that any resume should be accompanied with. It shouldn't just be a piece of paper.
Mark, when you look back on your own career, what was right and important? What would you do different today with all your experience that you have by now?
I think I'm lucky enough to say I probably would not have changed a whole lot. So I'm pleased. My career could have gone very differently, very badly, I'm sure, in many ways. So I am privileged in where it ended up. It came with a lot of hard work. And I realized that. And coming from a German family, I think hard work was always encouraged, sometimes demanded. So I think that all helped me. I mentioned before, I think the biggest mistakes are sometimes maybe not trying to avoid some of the harder deals, and maybe some of those would have pushed me even further, faster. Getting out of your comfort zone, I think, is very important so that you learn other skills very quickly. Again, taking the easy way in life generally is probably not the best way to get to where you want to get to.
Thank you very much, Mark, for being on our podcast show. We very much appreciate it.
Thank you for having me. It's been a lot of fun.